Bitcoin just surged above 110K. Are we headed for a historic bull run or a market trap? Meanwhile, global economies brace amid US-China trade jitters. Let's unpack it. It is June 10th, and this is your crypto and macro news roundup for the day. Bitcoin has exploded more than 3% this week, charging past 110K, just under 2% from its all-time high, pending a major breakout. Analysts note it's hitting a critical juncture where technicals are favorable, but macro uncertainties could cap the rally. In other news, Cathie Wood of ARK Invest boldly excludes traditional assets altogether, predicting Bitcoin at $1.5 million by 2030, citing limited supply and institutional demand. Meanwhile, Tom Lee from Fundstrat forecasts 150K by year-end and a possible $3 million target in the long term. What's fueling today's surge? US-China trade negotiations, currently gathering momentum in London, are fueling optimism. Asian markets rose on hopes of trade easing, while the US dollar weakened. However, analysts caution, without fresh macro catalysts like robust inflation data or further trade clarity, Bitcoin could hang on but not break new records. Beyond Bitcoin, a fascinating corporate trend has emerged. Publicly traded firms are stockpiling Bitcoin for their treasury, led by MicroStrategy, which now holds 582,000 Bitcoin, which is about 3% of total supply. Yet experts warn this strategy carries risk. Bitcoin's high volatility could force treasury companies to liquidate during market stress, adding fuel to the fire. Coming up this week, US CPI data expected midweek, potentially triggering volatility across crypto, stocks, and bonds. US Consumer Price Index data set for June 11th release indicates monthly inflation may edge up by 0.2%, pushing annual core CPI to 2.9%, well above the Fed's 2% goal. Tariff-related import costs are a key concern, splitting Fed views on whether the uptick is temporary or persistent. US and China trade discussions are still ongoing, and any progress could boost risk assets, or any delays could prompt caution or a drop across the boards. Citigroup is raising its reserves for potential credit losses, citing a deteriorating macroeconomic backdrop and weaker consumer financial health. The World Bank reduced its global growth forecast for FY25 to 2.3%, saying this could trigger the slowest non-recessionary decade since the 1960s. Nearly 70% of economies saw downgraded outlooks, with the US projected to grow just 1.4%. Why it matters? This signals big banks are bracing for economic weakness, typically a precursor to slower lending and restrained spending. We are still expecting inflation and monetary policy updates for the US, especially after recent jobs data showing wage growth near 3.9%. However, this number may be too strong for the Fed to ease rates just yet. In the UK, in the 3 months to April, UK unemployment rose to 4.6%, with a sharp drop of 109,000 payroll jobs in May, the steepest since early 23. Wage growth also slowed to 5.2%, prompting hopes for the Bank of England rate cuts in August, though MPC members urge caution on private sector wage strength. Bottom line, Bitcoin is on the cusp of a breakout if macro conditions align, but the dual forces of technical strength and global economic uncertainty make this a high-stakes moment. As Bitcoin hovers above 110K and the world braces for inflation data and trade diplomacy, the tension between hope and caution has never been sharper. Institutional money is flowing, but macro clouds still loom. Whether you're a trader, investor, or simply watching history unfold, one thing is clear. We're entering a decisive moment in global finance. Stay informed, stay focused, and as always, stay ahead of the curve by hitting the like and subscribe.